Hello again, everyone. Wanted to take a little time to chime in to connect with you, given the fact that there is a war going on with us and Iran and spread throughout more in the Middle East, as I'm sure you're aware. So we wanted to just touch base and just to give a little bit of perspective, because inevitably when these things break out, it gets people wondering about their money, about markets, and all of those related questions. So one of our partners that handles some of the money in some of the portfolios provided us some good data for this and just wanted to share it with you. So what we're looking at here is every single conflict that has erupted going all the way back to the Great Depression, which was in the very late 1920s. So it picks up with World War II and everything beyond that. And what we see, and is usually the case when we look back at these things, is the perspective that we get is encouraging even to me with all the time that I spend looking at this and along with our team here. But what we'll see is over 3 months, many of the 3-month periods of time after the initial conflict, which almost always has downward volatility, has righted itself, and we see quite a number of numbers that are in the black. The data will show some still down 3 months later. We see a similar result 1 month after the initial conflict, a lot more up than down, but some still down over a year. But when you go to 3 years, we see a really interesting outcome, which is that over 3 years, every single result in the United States markets was positive. And quite positive, to the tune of about 12% per year. When we shift up and look at the international markets, we see the exact same thing. Over 3 years, all of the returns are positive, and quite a number of them are really positive. And so it just helps feed into what we always try to help you take a look at, which is with all the things that cause upsets. And this last graph, which is the last thing that we're sharing as far as graphs go, it looks at simple growth of $1 over the times from the Great Depression all the way up to current times. And what we'll see is if we invested $1 way back then, today that would be worth over $15,000, actually over $15,600. That's a 15,000% rate of return. Takeaway for all of us is that with all of the volatility that pops up, the companies are very, very good at navigating around, in, and through those times to serve their customers well and to make a profit. So with that, the effort here is always on these sorts of messages is to give you additional perspective. Our hope with you having perspective will build the muscle of patience, which then helps the other P, which is our practice, which is to carry out your plan. So it's perspective, patience, our practice is to follow the plan. So just wanted to share that. If you have questions or just anything related to these matters, by all means, please reach out. We'd be happy to have a conversation. Thank you.